hits a record high of 1.18 lakh rupees per kg. Gold jumps 1,000 rupees per 10 grams as heavy buying continues amid global uncertainty and rising industrial demand. The Enforcement Directorate raids 6 Hyderabad locations in a 1,700 crore rupee bank fraud case involving SEW Group, seizes properties worth 120 crore rupees and freezes 33 bank accounts. ED also registers case against Flipkart-owned Myntra for alleged 1,654 crore rupees FTA violation, says company did multi-billion retail while claiming wholesale trade. PayPal to enable global UPI payments by 2026 under new PayPal World platform, starting with Venmo in the US and expanding to international shopping and in-store payments. Mumbai-Ahmedabad bullet trains Gujarat section to be completed by December 2027. Entire high-speed rail corridor expected by December 2029, says Railway Minister Ashwini Vaishnaw. Indigo flight from Ahmedabad to Diu aborts takeoff due to technical issue. All 50 passengers and crew members safe. Flight grounded at Ahmedabad airport. And a plane nosedives and crashes onto Italian highway, killing pilot and partner in massive explosion caught on video. In a major boost to economic ties, India and the United Kingdom will sign a landmark free trade agreement today in London. The deal aims to majorly open up markets, allowing India to export more labor-intensive products like leather, textiles, footwear and clothing at concessional rates, while at the same time slashing import duties on British goods such as whisky as well as cars. Now, the pact, officially called the Comprehensive Economic and Trade Agreement, will be signed in the presence of Prime Minister Narendra Modi and UK Prime Minister Keir Starmer. Commerce Minister Piyush Goyal and his British counterpart Jonathan Reynolds will formalise the agreement. However, it will still need approval from the UK Parliament before taking effect, a process expected to take about a year. Now, India and the UK had concluded negotiations on the agreement in the month of May this year. Once in force, it is expected to double bilateral trade to $120 billion by the year 2030, that's 5 years from now, from about $60 billion today. Now, under the agreement, nearly 99% of Indian exports will enjoy zero duty access to the United Kingdom market. On the other hand, tariffs on British whisky and gin will be cut from the current 150% to about 75% and eventually to 40% over a 10-year period. Automotive duties will also be slashed from over 100% to just 10%, but under a quota system. On a key social benefit, the two sides have also concluded a social security pact helping Indian professionals avoid double contributions when working in the United Kingdom for a limited time. Well, let's unpack all this with a special guest joining us this morning. Barnik Chitran Mehta, PE investor and managing partner, Chrysalis Equity Ventures, is here with us. Barnik, good morning. Thank you for your time. Help us put this into context. What exactly does the India-UK FTA mean for India's economy and India's export competitiveness?
I think this is a terrific news that we are inking the agreement today in the presence of the Honorable Prime Minister. I think the boost for Indian manufacturing and labor-intensive sectors are going to be immense. If you look at the deal, and you mentioned some of the details of the deal, I think we have signed something which I believe is an equitable and fair trade deal, which promotes free trade on both sides. I think the important part is fairness, right? I think the most important win for India is nearly 99% of goods which India exports to the UK will now become completely duty or tax exempt, right? And the remaining 1% will form into quotas, right? Which means there's a path thereof, right? To agree to that, I think the concessions given by the Indian side are not significant. I think the Scotch and the gin concessions are what's catching the news. But more importantly, I think India is allowing advanced manufacturing imports into India at concessional rates, right? And also allowing UK firms to participate in India's services business, notably government e-procurement. So again, lot to unpack, but it's a great win for India because it gives a terrific boost to our manufacturing sector. The UK, other than manufacturing automobiles and some aero defense and aircraft parts, doesn't really manufacture a lot. And this sets the stage for India to become a significant trading partner for the UK.
Right. We will dive into some of those details that you mentioned, Barnik, especially the industrial products which India would now import at a concessional rate. But coming to the timing of the India-UK FTA at a time when the India-EU FTA is also under discussion, and that particular deal has been in discussion for tens of years now, and also the trade deal with US, the all-elusive trade deal with the US. Given the timing of all that is happening in the world of trade deals and tariffs, how significant is the timing for India and UK to go ahead and sign this landmark agreement?
No, but Karthik, as I mentioned in the previous discussion, I think the US tariff wars and the Liberation Day tariffs have actually created a burning platform for trading partners around the world to do deals amongst themselves while they negotiate with the US. We had discussed the possibility of this trade deal getting signed before the end of the financial year, which is happening. I'm also very hopeful of the India-European Union trade deal also getting signed this fiscal. And there are rumors that the India-US trade deal may happen in September, October. So for Indian manufacturing, particularly before the end of the fiscal, if these three trade deals are signed and in the process of being operationalized, I think there'll be a big win for Indian manufacturing and Indian exports, right? And for India to only create upside going forward.
All right. And come back to the India-UK FTA, and you were mentioning an important fact that while it is the auto sector and the whiskey and the gin which is grabbing the headlines, but the industrial goods, especially those that go into medical devices, is something which is likely to give a fillip to India's high-end manufacturing prowess as well. Give us some of those examples. Which are the likely candidates who can potentially look at exporting more to India, and which are the sectors apart from healthcare which are likely to benefit from these high-end technologies that the UK produces?
Yeah, so I think if you look at India importing technology, I think which is needed for our industry to be competitive and for us to meet our domestic needs, I think two or three things immediately come to mind. I think if you look at defense and also aerospace, right, this is one sector where India will benefit from UK technology and UK imports. From a biomedical point of view, and particularly from a pharmaceutical device and component manufacturing, you will see that also gain a lot of fillip. The other part is auto components, where there is an interesting tie. India also will export a lot of auto components to the UK, but there's a possibility of some auto components also flowing back from UK manufacturing into India. So pharmaceutical, aerospace and defense and auto would be three spaces where high-end components would be imported into India and used in India, which I think in the long term will make our sectors more resilient and competitive. And over the long term, some of these components can also be localized to India and manufactured in India as well.
All right. And now let us talk about the items which are making news, which happen to be, of course, apart from whiskey and gin, the automobile sector. But UK only has luxury auto brands. Look at an Aston Martin or a Rolls-Royce or the Jaguar Land Rover, which is now owned, of course, by the Tata Group. But given the fact that it mostly is the expensive, luxurious automobile brands that we are talking about, the duty on them coming down from, let's say, 100% to about 10%, and that seems to be the goal. Is it likely to impact India's domestic demand for automobiles? That's question number one. And question number two, there doesn't seem to be much clarity yet on what that quota system is. So is there anything that you're picking up on what is that permissible quota under which the 100% duty will come down to 10%?
No, so I think let's unpack it. I think one is that the duty will move from 100 to 10, and then the imports will be limited by quota. I don't think I have heard any news on the quota. I think we'll have to look at the deal fine print. But I think this is not going to be a major impediment for India's automotive sector, right? Because if you look at the kind of vehicles the UK manufactures, right, they address less than 3 or 4% of Indian automobile demand, right? More than 60% of Indian automobile, when it comes to passenger vehicles, is under the 12 lakh or a 15 lakh rupee car. And if you look at the segment which we are talking about, these are segments which are closer to 40, 50 lakhs. They are less than 4 or 5% of the local demand. So I don't think there's going to be any significant issue with local manufacturing and local competitiveness. I think the government has deliberately kept a quota system to ensure that the market doesn't get flooded and there's no dumping of vehicles. Please remember, this is also a fair trade deal because India can also export in the automotive sector under a quota, right? So, with the intent of this being a fair deal, I think the quota system will work on both sides of the border. But let's see what quota system comes on board. But I don't think Indian auto manufacturing will be too scared about a few British cars getting imported into India.
Yeah, I mean, Tesla's entry has not scared, and in fact, Tesla has not even been able to get more than 1,000 odd bookings. So I think the Indian auto sector does seem to be resilient and confident at the same time right now. But coming to another interesting facet of this free trade agreement is about Indian workers in UK. And now this dual social security payments is something that this FTA is going to put an end to. How relevant is that for Indians working in UK on a short-term visa, which is 3 years or under?
No, I think it just gives an additional incentive for short-term workers to move to the UK. I think the other thing which has also been negotiated in addition to the Social Security Pact is expanded mobility visas or short-term visas for other areas like culinary workers, chefs and nurses, where the UK will liberalize its short-term business visa process, right? So I think if you look at the scenario in the UK, I think there has been a genuine immigration backlash over the last 10 years, but the economy needs a lot of short-term workers, probably in the medium skill to high skill area. So again, the UK wants to have the flexibility of inviting people to fulfill some of these short-term needs while ensuring that they don't have a long-term path to staying in the country, which I think also meets India's needs. So I think it's a win for both sides. I think the social security along with the mobility or short-term mobility for professionals will benefit both economies.
All right. And final question to you, Barnik. There is the FTA, which is getting signed, and then there is the BIT, the Bilateral Investment Treaty, which doesn't find a mention just as yet. Are there likely to be negotiations on the BIT as well? And what does India need to do to really expedite the BIT with multiple countries, not just the UK, and attract investments coming into the country?
So I think the BIT is far more hairy and far more difficult because it actually there is a lot more work and concessions which India needs to give on its end to ensure there's a fair investment framework. I think India has the habit of tweaking its taxes, tweaking the way it looks at investments coming from outside. So I don't expect the BIT to be signed or agreed upon in this visit. But there is, I've heard of fervent work which is happening on both sides of the border to get this done. I think if you look at the potential for India, one of the biggest unlocks we need to do in the economy is to attract more FDI. And I think bilateral investment treaties with few countries, including UK, European Union, and the US would help. I think there's more work to be done, but I suspect the work is more at the Indian end at the other end. Right. The other thing I just like to bring out, which is important, which I'd be waiting for the fine print of the deal, is the carbon border adjustment mechanism,
right.
Or the CBAM, right?
That's right.
I don't think there has been any news on what the deal there is. So maybe some fine print on that is still to be reviewed, because that's again one of the biggest impediments for Indian exports to the UK. So there have been no announcements on what the settlement on that is. So let's wait for the fine print on that to see how draconian or non-draconian that will be, because that's a significant impediment today for Indian exporters to participate in markets like UK and in the future European Union.
You're right. In fact, good that you brought it up, Barnik. The question really is that, is it just going to be the EU on which we'll have to fight that battle on carbon tax, or is it going to be UK as well? And I think the details of that should be in the fine print of the FTA, like you just mentioned. But again, this, in case there is some sort of a concession even on the CBAM, the carbon tax, it may not really be a 0%, right? So the point is that India's steel sector, India's aluminium sector, the metal sector is likely to face heat, not just from US, which is something that we've heard already, but potentially even from UK and EU.
No, so I think there will be some kind of carbon tax or duty. I think it will be more applied on sectors where India tends to use more what the West would call unclean energy or coal-fired energy. So again, if you look at the scope of the sectors, I am not very optimistic on the prospects of some of our harder manufacturing sectors like steel, aluminum or steel products. I think the fine print on the CBAM, both in UK and EU, needs to be reviewed. But I think for labor-intensive sectors, I don't expect there to be significant taxes on some of the elements we mentioned, like leather, apparel, footwear, or even gems and maybe pharmaceutical products.
Right.
But again, I think steel, aluminum, these are more longer term issues. I think there are intent which economies have, like UK and the US, to have more local manufacturing in that. So I do expect that there will be some trade barriers continuing in some of these categories going forward.
All right, Barnik Chitran Mehta, always a pleasure having you here on News9. Thank you so much for your time this morning.
Yeah, thanks.
And with that, we will slip into a short break, but more stories coming up on the other side. You are watching Morning Brief at 9.
एसोसिएट स्पॉन्सर डायना प्रीमियम ब्यूटी सोप, पहली झलक करे खूबसूरत।
ये रोशनी का सफर दिलचस्प है, दिलचस्प है।
हम सूरज से सिर्फ बिजली नहीं बनाते हैं, खुशहाली को देश के कोने कोने तक भी पहुंचाते हैं।
ये रोशनी का सफर
अदानी, हम करके दिखाते हैं।
Fresh air, the grill but different, the alloys but different, the sunroof but different, the seats but different. Different is in the XUV 3XO Rev X series, starting at rupees 8.94 lakh.
बुझने लगे किसी की उमंग तो उसको तरंग दो, दुनिया को रंग दो।
Birla Opus Paints.
खूबसूरत सी तुम कोई चिंता करो, पीछे भरोसा खड़ा है तुम्हारे, तुम नया कल बनाते रहो।
जब कोई हमारी बाकी चिंताओं को संभाल लेता है तो हम कर पाते हैं खूबसूरत सी कोई चिंता। टाटा कैपिटल में हम आपकी हर फाइनेंशियल चिंता को संभाल लेते हैं ताकि आप करें सिर्फ खूबसूरत चिंताएं।
Welcome back. You're watching News9. This is Morning Brief at 9. India's economy remained steady during June and July despite global challenges like tensions and policy uncertainty. This according to the Reserve Bank of India's July bulletin released yesterday. According to the report, the global situation remained uncertain due to geopolitical tensions and changes in trade rules. The RBI said India saw better chances for the Kharif crop season, steady growth in the services sector and a small but stable rise in industrial activity as well. Now, one big positive was that inflation stayed under control. Consumer prices or CPI inflation stayed below 4% for the fifth straight month in a row, which was mainly because food prices went down. The RBI also said that there was enough money in the banking system which helps pass on any future rate cuts more quickly to borrowers. Now, on the foreign front, India's position remains strong as well, helped by good foreign exchange reserves and low foreign debt compared to the size of the economy. But one possible risk ahead is rising oil prices. If global crude prices go up by 10%, India's inflation could increase by about 0.2% or 20 basis points. The RBI said this is the risk and India needs to slowly shift towards cleaner and cheaper fuels to better manage oil prices in the future. And finally, the RBI shared results from its household survey. It said people often expect inflation to be higher than what it really is, even when prices are stable. And there was a big surge in silver and gold prices yesterday, with silver touching a record high in the national capital. Silver jumped by as much as 4,000 rupees to reach 1,18,000 rupees per kg, the highest ever as per the All India Sarafa Association. Gold also saw a sharp rise. Gold of 99.9% purity gained as much as 1,000 rupees per 10 grams, now priced at 1,01,020 rupees per 10 grams. Experts say the demand for gold is rising due to global uncertainty, especially with fears that the US and EU may not reach a trade deal before the August 1st deadline. Now, this kind of uncertainty often pushes investors towards safer options like precious metals, including gold. Adding to that, a weaker US dollar is also supporting the rise in gold prices. Meanwhile, silver prices had already been rising sharply in the past few days. On Tuesday, it went up by 3,000 rupees, and over the last 3 sessions, silver prices have jumped by as much as 7,500 rupees per kg. Traders say the main reason behind the bullish silver market is strong industrial demand. Now, on the trading front, silver futures for September delivery went up by 896 rupees to touch 1,16,551 rupees per kg on the Multi-Commodity Exchange or MCX. Now, globally, spot gold fell by 0.26%, priced at $3,422.87 per ounce, while spot silver climbed by the same margin to about $39.39 per ounce. The Enforcement Directorate has carried out searches at 6 locations in Hyderabad in a major bank fraud case involving SEW Infrastructure Limited and its group companies. Now, the case is linked to SEW LSY Highways Limited, a company that was given a road project contract in Uttar Pradesh. The company had taken a loan of 1,700 crore rupees from a group of 14 banks led by Punjab National Bank. According to the Enforcement Directorate, instead of using the money properly for the project, the company and its group entities diverted and siphoned off funds by passing the work through a chain of subcontractors, each one at a lower cost. This led to a huge financial loss. Now, the promoters were also supposed to put in their own money as required under the loan terms, but the ED says the company recycled part of the loan funds to make it look like promoters had invested. Out of the total loan, 603.68 crore rupees was disbursed, but the project was never completed. Eventually, the entire loan turned into a non-performing asset with 621.78 crore rupees now outstanding. Now, during Tuesday's searches, the Enforcement Directorate seized financial records showing fund diversion along with property documents worth around 120 crore rupees linked to the promoters and their families. The agency has also frozen 33 bank accounts belonging to the firms and their directors. Meanwhile, the Enforcement Directorate has also registered a case against e-commerce platform Myntra, its related companies and directors for allegedly violating foreign investment rules worth over 1,654 crore rupees. Now, the case was filed by the agency's Bengaluru office under the Foreign Exchange Management Act of FEMA based on credible information that Myntra was carrying out multi-brand retail trading while claiming to operate as a wholesale cash and carry business. According to the Enforcement Directorate, this violates India's FTA policy, which does not allow foreign direct investment in the inventory-based model of e-commerce, where companies sell goods directly to customers. The alleged violation took place between the years 2010 and 2015 when Myntra's founder Mukesh Bansal and Ashutosh Lavania were running day-to-day operations. The agency says Myntra received over 1,654 crore rupees in foreign investment, which is used to sell goods mainly to another company. Now, Vector E-commerce, a related party under the same group, Vector then sold the goods directly to retail customers. The ED claims this was a way to hide direct retail sales and bypass FTA rules. In response, a Myntra spokesperson said the company is committed to following Indian laws and will fully cooperate with authorities, though it has not yet received a formal notice. And making international payments is now about to get much easier as well as cheaper for Indian users. Soon, UPI will be used to shop on at global websites and even at physical stores abroad without worrying about currency conversion fees or extra credit card charges. This comes after PayPal announced a major global initiative called PayPal World. The platform will link different online payment systems and digital wallets around the world, and UPI is one of the key players in this partnership. In a big move, PayPal has teamed up with National Payments Corporation of India International, which runs UPI, to make this happen. This means Indian UPI users may soon be able to send and receive money globally, even to PayPal users in countries like the US, something that's currently possible only with PayPal's American app Venmo. The feature is set to roll out fully in 2026, starting with Venmo users in the US, But PayPal World itself will launch later this year and will include other global platforms like Pay from China, Mercado Pago from Latin America, and Venmo from the US. Work in the Gujarat portion of the bullet train corridor between Vapi and Sabarmati is planned to be completed by December 2027, and the entire project from Maharashtra to the Sabarmati section is expected to be over by December 2029. Railway Minister Ashwini Vaishnaw said the project is being built with technical and financial support from Japan. Now, the Mumbai-Ahmedabad high-speed rail project will pass through Gujarat, Maharashtra, Dadra and Nagar Haveli with 12 stations planned, including stops at Mumbai, Thane, Virar, Surat, Vadodara, Ahmedabad and Sabarmati. The Railway Minister said that while these are the target dates, the final timeline will depend on the completion of key components like civil works, track laying, signalling, electrification and supply of transets, given the complex and technology-heavy nature of the project. An Indigo flight from Ahmedabad to Diu had to abort takeoff on Wednesday after a technical problem was detected. The incident took place around 11:15 a.m. at the Sardar Vallabhbhai Patel International Airport. According to airport officials, the aircraft developed a technical snag just as it was about to take off. Officials confirmed that 50 passengers were on board and crew members on the flight, and all of them were safe. Time for another short break. Coming up on the other side, Kranti Batini will be here to decode all the market action on the Lal Street. You're watching Morning Brief at 9 right here on News 9. Do come back.
एसोसिएट स्पॉन्सर एंकर टूथपेस्ट, नए जमाने की नई सुरक्षा.
Fresh air. The roof, but different. The grill, but different. The alloys, but different. The seats, but different. Different is in the XUV 3XO Rev X series, starting at rupees 8.94 lakh.
भाई, on road या off road?
रोड ट्रिप पे किस बाइक की सवारी होगी, ये खूबसूरत चिंता आप करिए. 2-व्हीलर लोन की चिंता हम संभाल लेंगे विद स्पॉट अप्रूवल एंड लोन अप टू 95%.
ये रोशनी का सफर दिलचस्प है, दिलचस्प है.
हम सूरज से सिर्फ बिजली नहीं बनाते हैं, खुशहाली को देश के कोने कोने तक भी पहुंचाते हैं.
ये रोशनी का सफर
अदानी, हम करके दिखाते हैं.
Go condoms?
It's over there.
क्या ये डिफरेंट साइजेस में आता है?
Actually, sir, size matter नहीं करता.
तो फिर क्या मैटर करता है?
The hardness
Of the condom.
of what's inside.
For the first time ever, presenting Hard Rock Gel, the hardness gel for men.
अब फ्री हर स्कोर कॉन्डम्स के 10 पैक के साथ.
Welcome back. You're watching News 9. This is Morning Brief at 9. Let's bring you all the market action. The Indian stock markets opened about 15 minutes ago, and it seems to be a gap down opening, at least for the broad indices. Both Sensex and Nifty in the red this morning, all be down by just about 0.1 to 0.2% or so. Nifty 50 is below the 25,200 levels. Meanwhile, Sensex is right now trading at about 82,580 odd levels. Small caps and mid caps are also in a similar range bound session this morning, while the small cap is pretty much flat at about 18,881. the Nifty mid-cap is taking a little more of a beating, down about 0.25 percentage point. Volatility, though, in the Indian stock markets is much lower this morning at about 10.5 or so. Let's look at where the action is coming from, especially in the red zone. And it seems that the biggest culprit again this morning happens to be the IT sector that we discuss very often with Kranti Batini, who's on the show right now. But let's look at the Nifty 50 heat map and take a sense of what are market and investors reacting to, especially in light of what we saw from Infosys yesterday, again missing estimates. And as expected, the Infosys stock just about 15 minutes into trading is down about 1% or so in trade, broadly taking the entire IT pack down with it. Meanwhile, not great news coming in from the banking sector as well. HDFC, ICICI Bank, Axis Bank, Kotak Mahindra, SBI, all heavyweights in the red this morning. Better news coming as expected again from companies like Eternal, which has had a fabulous week. Remember, on Monday, the first trading session after its results were announced, the stock was up about 6%. The day after that, on Tuesday, we saw almost a 10% rise in stock, and that winning momentum for a stock like Eternal is continuing to grow. But given that heavyweights, especially in the IT sector, are taking a beating today after what we've seen in Q1 results, the overall mood on the markets is fairly somber. Kranti Batini, equity strategist at Wealth Mill Security, is here with us this morning. Kranti, good morning. Not much difference that we've seen from Infosys, even though results seem to be a little better than what we heard from TCS and Wipro, but markets not reacting favorably to what they are hearing on the IT front, a sector that we discuss fairly often. But again, IT sector not really living up to expectations, and many now saying that perhaps not living up to the expectations of India's AI boom as well.
Absolutely, Karthik. The results from the companies, especially for the Q1, the companies declaring, they're not enticing the markets at this point of time. That is the reason markets, if you see, they have been in a consolidation phase right now, trending at the 25,000 level range of Nifty. And due to the uncertainties, there is still the uncertainty is there with respect to the global growth, and the companies increasing their budget. Still, there is a lot of uncertainty. That's where markets are still mulling at this point of time to take any big position in terms of the IT is concerned. The earnings season, mid and small cap stocks have been showing its resilience, and they're giving strong guidance. Whereas the bellwether companies are concerned in the large cap space, except a few like the banking space, HDFC, ICICI of the world, barring that, the remaining, the large caps are concerned in Nifty and the bellwether companies in the Sensex. They have been in a consolidation phase. The earning enticement is not coming to the market at this point of time. That is the reason what we are witnessing is very selective buying is taking place in the market, and markets are waiting for some kind of a strong positive news from this range.
Of course, markets are waiting for news which happens to be elusive, not coming their way. But look at the entire IT pack this morning, Kranti. Despite double-digit growth in net profit, at least for companies like Persistent and Coforge, and these are companies that you have been talking to us and in fact comparing them to the bellwether IT stocks and saying that these could be perhaps long-term bets for Indian IT investors. But even despite decent growth registered, albeit missing estimates, Persistent is down almost 7% in trade right now. Coforge is down about 5.5% or so. Overall, the entire mood on the sector, even the medium-sized IT companies, despite decent growth, are not able to entice investors at all. What seems to be the core reason behind that?
Yeah, one thing, Karthik, the buying interest is not coming at this point of time. Of course, we tend to see some kind of a selective buying here and there that do comes. But with respect to when the sector is in a downtrend, when the sector is going through a murky kind of a situation and kind of a turbulent time, so the by and large, the mid and small caps are high beta in nature. That's where we can see the mid cap names like Persistent and the other names like Tech Mahindra and other companies. Okay, they tend to get have that high beta nature on these companies. That's what we are witnessing. But Karthik, for a longer term perspective, if the investors have 2 to 3 years kind of a perspective, one can use this downtrend to cherry pick in this downtrend these companies in the portfolios, because these companies carries a strong business models. So any dip in these kind of companies gives a good opportunity. Once the cycle revives, okay, these are the first companies to get benefited over a period of time. For some kind of a medium to short term, of course, this overhang is there. No fund manager until unless a fund is a completely long only fund who see some significant value. Okay, they're the first runners to go and pick up the stocks. Otherwise, slightly they're staying sideways with respect to IT is concerned.
All right, let's move on to another sector, Kranti, and let's talk about Tata Consumer, which again announced results yesterday. Decent guidance coming for that stock, but again, not really able to drive the entire sector. While Tata Consumer is up more than 1% in early trade this morning, the overall FMCG pack still seems to be fairly flat. Again, inflation is low. RBI bulletin suggests that India's fundamentals, the economic health seems good, but no momentum really even on a sector like FMCG right now, which is so intrinsically linked to inflation data, Kranti.
Karthik, you are absolutely correct. The consumer basket, especially the FMCGs are concerned. Look at Lever's returns in the past 4 years. They are not even, they are in single digit. But the consumption theme is quite strong in India. What we are observing, Karthik, there is a complete transformation in the consumer basket at this point of time, especially the FMCG ones. These markets are getting dominated, are their margins getting squeezed for a period of time. There are many regional brands in the unlisted space have been emerging at this point of time. The toothpaste, if you look at Colgate, the earnings are down. That doesn't mean that people are stopped using their product, or doesn't mean that people are stopped the behavior. But there are many organic, many regional brands are emerging, and they are slightly taking away their markets. People are consuming a tea, which is from a regional brand, which is more about a organic, the soaps. So those kind of themes are emerging. So especially except Patanjali, in terms of the stock performances are concerned, majority of these stocks like the Dabas of the world and the HULs of the world, they have been flattish in terms of their returns are concerned. So this is the significant change what we are expecting. But given the kind of the current, the downtick in the inflation is concerned, definitely for these companies, margins are expected to go up, and the disposable incomes are, as they are going up over a period of time, we can see some kind of a sectoral revival and increase of the margins for these companies in the next couple of quarters. So if the investor have a low risk appetite, extremely long term, one can try to pick up these stocks.
All right, and finally, let's also move to the pharma sector. Dr. Reddy's had announced his results yesterday. Mixed brokerage views on Dr. Reddy's, but despite an 11% rise in revenue, plus another spate of positive news coming with India and UK finally signing that FTA today, there is likely to be better momentum ahead for India's pharma sector and drug makers like Dr. Reddy's as well as Sun Pharma and Cipla, all of them in the green this morning. But Dr. Reddy's expectedly up about almost 2% or so right now in trade, Kranti, but mixed view on brokerages, some saying that perhaps the guidance wasn't strong enough for the future.
Karthik, with respect to Dr. Reddy's is concerned, the stock is a fully priced in stock at this point of time. So that's where the market is anticipating a stronger guidance. As you rightly mentioned, the trade deals where India is trying to make, of course, UK and India trade deal is in the finalization phase. It can be signed today. So the new deals where India is trying to make with the other regions, that also benefits the Indian pharma companies to market our products in those regions. UK India trade deal can be positive for Indian pharma companies. Majority of Indian pharma companies also trying to start their manufacturing plants also in UK, but the current trade deal can give some kind of a export free zone kind of a thing that will benefit these companies and increase their margins.
All right, Kranti Batini, thank you so much for all those details and for sharing your views on these particular sectors. As always, pleasure having you here with us on News9.
Pleasure, Karthik. Thank you.
And before we slip into another break, let's look at the other global stories that we're tracking for you this morning. US President Donald Trump says Washington is close to finalizing a trade agreement with China, signals a possible breakthrough in one of the world's most closely watched economic negotiations. Trump announces that NATO allies have agreed to fully fund US-supplied weapons bound for Ukraine, calling it a major shift in defense burden sharing across the alliance. Japanese Prime Minister Shigeru Ishiba confirms that US tariffs on Japanese autos will fall from 25% to 15% following a landmark trade deal between Tokyo and Washington. Donald Trump rolls out a new blueprint for artificial intelligence, promising faster approvals, reduced regulation and major investments to win the global tech race. Columbia University agrees to pay $200 million over 3 years to settle federal accusations over failing to address harassment of Jewish students on campus. Tesla reports a drop in quarterly earnings, with owner Elon Musk warning of a rough period ahead following the rollback of EV tax credits under Trump's latest fiscal package. EU Commission President Ursula von der Leyen and Council President Antonio Costa arrive in China for talks on trade and Ukraine, though both sides expect little progress. South Korea's economy grows just 0.5% its second quarter as booming semiconductor exports fuel the country's strongest export growth in nearly 5 years. And Apple enters the Saudi market directly for the first time, launching an Arabic language store and app to offer local customers direct access and support. These stories on the other side of the break. You're watching Morning Brief at 9.
एसोसिएट स्पॉन्सर एंकर टूथपेस्ट, नए जमाने की नई सुरक्षा.
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
Light, camera, and action. Kick back, relax, grab your favorite snack because News9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News9's pick of the week, don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
Welcome back. You're watching News9. US President Donald Trump said on Wednesday that the United States is close to finalizing a trade agreement with China, signaling a potential breakthrough in one of the most closely watched global negotiations. Speaking at an event on artificial intelligence in Washington, Trump said the China deal is part of a broader effort to reset global trade relationships. Take a look at what he said.
And we're in the process of completing our deal with China. And as you know, the UK, we made a deal. It was a very good deal for everybody. Everybody's happy. It's always nice when everybody can be happy. But mostly we'll be charging straight tariffs to most of the rest of the world because we have over 200 countries. People don't realize that's a lot of deals. Even if you're like me, a deal junkie, that's a lot of deals. That would be too much for anybody. Ooh.
A lot of deals, says Donald Trump. Meanwhile, Trump also said on Wednesday that NATO allies have agreed to fully fund US-supplied military equipment destined for Ukraine, marking what he touted as a major breakthrough in defense burden sharing. Listen in.
Just made a deal with the European Union where they're going to pay the United States of America 100% of the cost of all military equipment. They're going to ship it to the European Union and then they'll distribute it. And much of it will go to Ukraine. It's been a long time since you've heard those words, because we're in for $350 billion. But now we send it to Europe, and Europe pays. And great. We had a tremendous NATO meeting a few weeks ago, and it was pretty amazing, actually, what happened. They agreed to go from 2% to 5%, and they had 2% where they didn't pay. They have 5% where they've already paid. That's a big difference. That's trillions of dollars, actually, trillions.
Meanwhile, Donald Trump, as well as Japanese Prime Minister Shigeru Ishiba, signed a sweeping trade deal yesterday that imposes a 15% tariff on Japanese imports and includes $550 billion of Japanese investments pledged into the U.S. Japanese Prime Minister Ishiba confirmed that tariffs on Japanese auto will drop from 25% to 15%. President Trump called the pact the largest deal ever, highlighting Japan's pledge to invest heavily in the U.S. economy. Now, crucially, no import duties will apply to Japanese vehicles in the U.S. However, tariffs on steel and aluminium remain at 25% outside the scope of this agreement. At the Wall Street, the S&P 500 and Nasdaq notched record high closes again on Wednesday as the European Union and the US appeared headed towards a trade deal similar to an agreement President Donald Trump struck with Japan. Take a look at this detailed report.
U.S. stocks posted solid gains on Wednesday, with the Dow adding more than 1%, the S&P 500 climbing more than 0.75%, and the Nasdaq gaining roughly 0.6%. The S&P 500 has now climbed about 8% in 2025, while the Nasdaq has gained almost 9%. Wednesday marked more record high closes for both. A U.S. trade agreement with Japan helped lift the indices, and the European Union appeared to be headed toward a similar deal. That's according to two European diplomats who said an agreement could include a broad 15% tariff on EU imports. Michael Landsberg is Chief Investment Officer at Landsberg Bennett Private Wealth Management.
The trade deal obviously is good news. I think what happens, I think there's a fear at some point that will a president get deals done or will he be too hard a negotiator? And the fact that he got a deal done with Japan, I think, again, portends well for what's going to happen with the EU. So I think this is a little bit of a relief rally where people are saying, hey, we're going to get some deals done. Again, I think China is going to be the last one to fall. And I think that's an area where he's going to continue to work on that. But I think it shows that he can get some deals done when crunch time comes.
Stocks on the move Wednesday included Alphabet, which rose about 2% in extended trading after the Google parent beat Wall Street's second quarter earnings estimates. The tech giant cited massive demand for its cloud computing services as it hiked its capital spending plans for the year to about $85 billion. Also reporting after the close, Tesla, which posted its steepest decline in quarterly revenue in more than a decade with a 12% fall. The EV maker is battling strong competition from cheaper electric vehicles and a backlash against CEO Elon Musk's political views. Shares of Texas Instruments tumbled more than 13% after the semiconductor company's quarterly profit forecast pointed to weaker than expected demand for its analog chips and underscored tariff-related uncertainty. And shares of GE Vernova surged more than 14.5% to an all-time high after the power equipment maker raised its revenue and free cash flow forecasts and beat Wall Street estimates for second quarter profit. GE Vernova has gained over 80% so far in 2025, with power consumption on track to hit record highs due to growing demand from AI and cryptocurrency data centers.
And moving on now, the Trump administration rolled out a new artificial intelligence blueprint on Wednesday, signaling a major shift in US tech policy. The plan aims to relax environmental rules and vastly increase AI export to allied nations in a bid to preserve the American lead over China when it comes to technology around AI. In a speech announcing the initiative, President Trump framed the move as central to winning the defining technology competition of the 21st century. The strategy includes around 90 recommendations ranging from encouraging outbound sales of AI software and hardware to initiatives that would dismantle restrictive state-level regulations.
My administration will use every tool at our disposal to ensure that the United States can build and maintain the largest, most powerful, and most advanced AI infrastructure anywhere on the planet. America needs new data centers, new semiconductor and chip manufacturing facilities, new power plants and transmission lines. And under my leadership, we're going to get that job done, and it's going to be done with certainty and with environmental protection and all of the things that we have to do to get it done properly. Virtually all of these large capital investments can be and should be made by the private sector. And they want to do that. They just want to be able to do it.
America's Columbia University announced on Wednesday that it has reached a settlement with President Donald Trump's administration, agreeing to pay $200 million over 3 years to resolve accusations that it failed to adequately address harassment of Jewish students on campus. Now, under the deal, most of the federal grants that were revoked or frozen in March 2025 will be restored, reopening access to billions in current and future funding, according to Columbia's statement. The U.S. Department of Education has not yet commented on the agreement. The announcement followed disciplinary action taken by the university against dozens of students involved in pro-Palestinian demonstrations earlier the week. Harrowing footage from a highway in northern Italy's Brescia city on Tuesday showed a small aircraft nose-diving onto the road before erupting into flames. According to local authorities, the violent crash killed the pilot and a passenger on board. The injured two motorists caught in the blast. The plane crashed shortly after takeoff, erupting into a fireball upon impact with the highway. Visuals on your screen. And Apple has officially entered the Saudi market without relying on resellers or regional partners for the first time. On Wednesday, the tech giant launched its own Arabic language online store and app offering direct sales, support, and a richer user experience tailored to local customers. Now, with the new digital presence, Apple is now serving the kingdom directly, providing Arabic support, a localized app, and seamless access to its full product range. As part of its long-term strategy, Apple plans to open its first flagship store in Saudi Arabia by 2026, with additional retail locations to follow. The move aligns with rising tech investments in the kingdom, which has positioned itself as a regional center for innovation and digital transformation. And that's all we have for you on the Morning Brief at 9. Thank you so much for watching, but news continues right here on News9, so stay tuned.
एसोसिएट स्पॉन्सर एंकर टूथपेस्ट, नए जमाने की नई सुरक्षा।
Every brand tells a story, and they are the storytellers.